Hey, my friends, I hope you're doing great. That February has been off to a great start for you, and this whole year has been off to a great start. You got to enjoy some snow shoveling, some colder weather. We thought we were out of it, but then it came back with a vengeance. And then you also got to enjoy watching the Olympics. How amazing is it? We would have the Olympics on in the background, watching biathlon, which is a crazy sport of skiing and then shooting a gun. And then you've got figure skating and speed skating. And who knew we were so good at speed skating? And then bobsled and all those amazing sports that people put their heart and soul into. And then, of course, we got to watch hockey. And if you are like me, we had our hearts broken a little bit. But how proud can we be of effort? And just like when we talk to the team that I get to coach here, and shout out to the SA 617 Grizzlies, the team that I get to coach, we talk about all you can control. You can control the effort that you put in. We can't always control the results. We can't control what happens around us, but we can control what happens in us and through us. And so, I mean, those guys, just so proud of all the Canadian athletes and how amazing an event that was, and how proud we can all be as Canadians. We get to live in this amazing country with so many athletes doing wonderful things, and we get to input that into our days and do great stuff. A side note, next month there will be another thing that I'm going to be launching. It's going to be on Substack, and that's where we'll have some more personal thoughts and business growth and life growth on there. So I'll keep you posted on that. We'll start it small and then we'll see where it goes. But just so you're updated on what's going to be happening this year with that. Now, let's look at our real estate market. What's going on in Edmonton, in St. Albert, the surrounding areas this year? And I can tell you, if you're looking at a couple specific markets, it really is almost a tale of two markets. If we look at Edmonton, we look at St. Albert, there's two different things that are going on, but I think they're going to blend into one as we head to the rest of this year. So let's first take a look at Edmonton. What's happening in Edmonton? And we're looking at numbers that go back from January and how the market has been reacting. And so some quick shots that we'll take a look at here. Our listings are starting to come up, and this is what happens. January, December, those are going to be slow months, and these are going to be January numbers. And then as we head into February, March, April, May, we're starting to hit off some peaks. May, June, July, August, that really is around where we're going to peak out in our market often. But again, every market's different. We taper down slightly for September, back to school. We come up a bit until we get really cold, and then we come back down. So it's really this market that kind of flows along like a wave. We're starting to ride the up part of the wave. And so we're going to start to see more listings coming on. We're starting to see more sales coming on. And then we're starting to see our pricing and the changes that are happening there. When we look at our inventory, we've got 4,900 units of inventory from last month, and our sales are about 1,151. So we're seeing the sales are down year over year, month over month, but our listings are starting to increase. So listings are increasing, sales decreasing. That's creating a bit of the gap, and that gap ends up putting pressure on pricing, as you're going to see here, because we look at our average pricing in Edmonton. Our average detached home that's sold at $556,000. And that is a 2% decrease month over month and a 1% decrease year over year. So, I mean, slight movements, but still relatively stable. Nothing too crazy there. Our semi-detached, those half duplex properties, those are at $422,000, flat month over month and up 1% year over year. Our row and townhomes, those are going to be more affordable. We go from single family detached, least affordable, the most expensive product type, and then narrowing our way down to lesser and lesser expensive, more affordable. Row and townhomes, attached multiplex style properties, those are at $296,000, down. It's just nominal, essentially 0% month over month, and then 5% year over year. So a little bit of a dip in pricing there. And then our average condo sales, we've seen some higher end sales, $968,000 condo sell. So that's pushing our pricing up. We're seeing our pricing at $225,000, up 17% month over month and up 11% year over year. I do think we're starting to see a little bit of a push. We've seen our condo prices dip. This, I don't think we're going to stay here. I think they're probably going to see this price slip down a little bit after some of these big sales go off. And so the next month we'll probably see it come closer down to $200,000, which has been around where we've been. But we're starting to see some activity in the downtown condo market even. We've been involved in some multiple offers with clients, and we're seeing some strength there. Not the strength that most likely people when they bought and they paid a high amount, maybe 10, 15, 20 years ago, we're still not there, but we're starting to see some strength in that condo market. Our detached, the average days on market for detached homes, we're sitting at about 54 days, and that's up a little bit. We were 51 last year. And so all those things, we're seeing a little bit of increase in inventory, a little bit of decrease in sales. Our prices are starting to just slip a little bit. except for those condos, but we'll see what happens next month. And so we're seeing a little bit of that. We're at 4.3 months of inventory, which does put us into a balanced market technically. So when we're in below 4 months is going to be sellers, 4 to 6 is really going to be balanced, 6 and up is going to be buyers. So we've been in the seller's market for a long time in Edmonton, where we just slipped into a balanced market there in January, but I think we're going to dip back into seller's market as we get into the next months, as we see things progress. Now, St. Albert tells us a little bit of a different story. When you're looking at St. Albert's markets, what we have is we've got these suburban pockets that perform really well in the Edmonton area. You're going to have the Sherwood Parks, the Spruce Groves, and then you're going to have St. Albert. And so specifically St. Albert, my neck of the woods where I live, but again, we work all over the city, even out into acreages that are way beyond the city and selling land and different things like that. But St. Albert here, what we can look at and see for our stats, currently, as we sit here today, there's 97 active properties, which is down slightly. We had 100 the month before. Our sales, when we look back at January sales, we saw 38 sales. And so the month previous to that was 30, and then last year was 38 sales as well. And so there was one sale put us up to 39, but it was annexed land at 3.8 million. So we removed that just because it didn't really fit with the average home pricing. But 600,000 and under, we've got 21 homes that have sold in there, and then 600 to 800, there's 12. So we really see that 800 and under, that's where the majority of our market is. Or above that, we're going to see another 5 properties or thereabouts that are 800 and then beyond a million. And so really that strength is going to be 800 and under, and truly 600 and under. And if you're in that market in St. Albert, 600 and under, you will probably have been in multiple offers over the last month. So we're seeing homes with 10 offers going $50,000 over list price because there's such a demand for this product type here in town. And so that's pushing our days on market to 30 days on market in St. Albert. So, and that's going to be down from the month previous, which was 51, and the year previous was 53. So we're seeing this big push now for these property types, and that's pushed our pricing. So our average price out here in St. Albert is $640,000 for the time being, a median price of $592,000. And last month it was $601,000 for our average price, and the median was $552,000. So we're seeing a bit of a push out here in St. Albert, and maybe that's going to be a bit of a barometer for what we're going to see in Edmonton too. Who knows? That price last year was $604,000 for our average price, and median was $537,000. So we're seeing that increase here. So up about 5% year over year and 6% month over month in pricing. And our highest sale was a $1.1 million home in Lacombe Park Estates when we take out that $3.8 million annexed land. We've seen this price increase, this value increase, and our low sale has been $321,000 in Grandin. Our month of inventory out here, we're at 2.5 months of inventory. So we're clearly in a seller's market in St. Albert, whereas in Edmonton, we've got a balanced market. In St. Albert, we're clearly in the seller's market, and that is down from 3.3, so the month prior. So we've slipped even more into that seller's market. So what does that mean? It means that we've got greater Edmonton area, which is performing in one way, and St. Albert's actually numbers are even inclusive in there. So if we remove St. Albert numbers, that would make a bit more of an impact on those Edmonton numbers. We've got St. Albert in these suburbs that are providing some strength in our market. And I think that's probably what we're going to see as we go through the rest of this year. We're just at the beginning. We're at the starting blocks. I think we're going to see continued strength when we're looking at product type. We don't have a lot of really great inventory, especially out in St. Albert and those Sherwood Parks and those types of communities, and really strong, good properties that people want to move into, that provide good value and that are affordable, that are under that $600,000 range. There's not enough good inventory out there. And I think we're going to see that continue through the rest of this year. I believe we're going to see strength, probably similar to what we've seen now. Inflationary-plus growth, I would imagine, especially for single-family detached homes. And good homes are going to sell really quick. So you got to be ready. If you're a buyer, you got to be ready in this market. If you're a seller, you got to come to market strong, clean, bright, and properly marketed, and with the right team behind you. And whatever we can do to help you out, of course, we're here to do that and serve you however we can. Thank you, my friends, for taking some time to nerd out with some numbers with me, and whatever I can do to help serve you, that's what I'm here to do. All right, have a wonderful rest of your day, my friends. We'll talk to you soon. Bye-bye.